Hey, stock and options traders, welcome back to the channel. If this is your first time here, my name is Karl, Karl with a K, and I've been trading stocks and options online since the mid-1990s. If you're here to learn about trading or to figure out if a stock or options course on YouTube is worth the money, then make sure to subscribe to the channel. Now, one of my goals is to change this industry. I want to change the buying criteria when anyone wants to buy a stock or options course on YouTube. If promises are made by a YouTube instructor when selling a course, then I believe they should prove their credibility. I see only one way to prove credibility, and that is to share P&L. Not only share P&L, but also share the account P&L volatility, which means how much did the account value move up and down. If your account made 20%, but it was down 60% at one point, then the 20% return is not really a good return on risk. Sharing P&L volatility is important because risk-adjusted returns are the truth. And this is why I share my P&L and I show my daily moves of my P&L. Now, I would not buy a course from a YouTuber that makes promises without sharing their P&L, and I hope you wouldn't either. In this video, I'm going to go over my real P&L for the month of January 2022. I'm going to share my real P&L for the month of January 2022, and I'm trading 4 separate systems in 4 separate accounts. Before I get into the P&L, I want to briefly go over what the market did in January, and this will give an idea of what my trading systems had to contend with over the last month. Now, my question is always, what type of market was January? In my book, I go over the 4 market types for premium selling options traders. And that's what 3 out of the 4 systems are set up to do. They're set up to take advantage of the difference between implied volatility and actual volatility by selling option premium. Now, the 4 market types are number 1, the rising bull, number 2, the sideways market, number 3, the grind down market, and number 4, the crash market. So I'm going to get into what happened this month in the market. Okay, what type of market was January 2022? Let's take a look. First of all, we know we're down. Let's see, at the end of the month, we were here. And now we're here, so we're down 5.23%. We were down as low as 11.35%. Of course, I'm looking at the SPX, which represents the S&P 500. Now you can see that we went down and then kind of popped back up. So, obviously it's not a bull market or a sideways market, but was there a crash? No. The answer is no. It was not a crash market because hedges did not get activated. So this is a grind down, one of those rare grind downs. Let's take a look at the VIX, see what it did. So we can see the VIX got up 126% at one point and did up 45%. So the VIX has gone higher. This hurt a lot of option sellers, premium sellers, and they're probably still hurting pretty bad right now. But this is definitely a grind down type market. And one of those, grind down markets are pretty rare. This is a grind down market this month. Next, I'm going to get into my 4 separate trading systems. The trading systems are number 1, the safe wheel, number 2, the earnings edge, number 3, my 5-step, and number 4, the synthetic dragon. Now, first, the safe wheel strategy. This is a strategy I give away for free every Monday morning at 7:15 a.m. Pacific time. I do it live stream, and I trade the account live right in front of you. I also answer any and all questions about the system in order to help people learn it. So here are the results for the safe wheel for January 2022. Okay, the safe wheel strategy account for January 2022. You can see we started with $5,000. And didn't have any drawdowns. Came close here, but really no drawdowns. There's no downside volatility, and we did end with 5,193. So let's do some math on that. So we made $193, right? 193 divided by 5,000. 3.86%. That's pretty high. I mean, I'm not probably expecting to see that kind of return constantly with this account, but I am expecting to see pretty low volatility in this account like this. But that's pretty good. That's a really good month, but I don't expect to see that that high a return per month. Second, I trade my earnings edge alert system. This system is based on trading a stock coming into earnings. And I started with a $5,000 account, and I look to make one trade a week when earnings trades are available. And my goal is to make about $300 per trade. And I'm looking to win 3 out of every 4 trades. If and when this is accomplished, it will be economical to follow my trades with a $5,000 account. And the cost for this service is $259 per month. So here are the results for January 2022 for my earnings alert system. Okay, you can see we started with $5,000 beginning of the year, and we did have some downside volatility. Let's see, it was down to about 4,100, so that's $900 it was down. And now it's down, well, let's do some math. So 900 divided by 5,000. So we saw 18% drawdown, and this is kind of expected with this account. There's going to be some volatility in this account, and I do expect to see this kind of volatility in this account. This is a pretty risky trade, but I think if I can win 3 out of 4 trades, this is going to be a nice, pretty nice returns. But there is going to be some volatility, so I'm not surprised at all. But we started with 5,000, and we have 4,559. So we're down 441 divided by 5,000. So this account's down 8.82%. So I didn't expect to kind of be down this much. I thought I was going to win 3 out of 4 trades, and I only won, well, actually, when you look at it, there were 4 trades taken, but altogether it was probably -1 because I tried to make $300. And it's down, what, 400? So it's down by a factor of, 1.5 trades. But still, down 8.82%. Not surprised about the volatility in this account. You could expect volatility in this account when I'm trading the earnings edge, looking for the edge there and trying to mine that edge. Third, I'll get into the P&L for my 5-step options trading program. Now, this is a system that is proprietary and took me over 3 years to develop as I kept racking my brain trying to replicate what I was doing in my larger portfolio margin account. I wanted to replicate this system in a regular margin account. And I backtested over 300 different trade plans until I finally came up with a successful system that I could trade in a smaller account that outperformed the S&P with lower P&L volatility. Now, I make these claims based on the last 10 years of backtested results along with 21 months of trading it live. Now, I do have to make a disclaimer that since I've been trading it live, the system has not outperformed the S&P. And to see my results, refer back to my previous Real P&L monthly videos. Now, even though it does not replicate the exact system I'm using in my larger account, it's about as close as you can get. Now, the worst case scenario when using this system is that you can learn the mechanics of how I trade options without being subjected to any major volatility in your account. The 5-step options trading program is not dependent on picking a direction, so an unpredictable market does not have a negative effect on the trading system. Now, because this system uses regular margin, it is not as robust as the synthetic dragon, and it has one market type where it can, but not always, underperform, and that is that rare grind down market. So here are the results for my 5-step. Okay, now this account started with this month 14,893, and it's currently at 14,113. So as I've mentioned before, this particular trading system, this is a 5-step. It can have problems in a grind down market. Sometimes it'll do okay in a grind down market, and sometimes it'll get beat up. And this particular time it got beat up in the grind down market. And obviously this is a higher drawdown that I've ever seen. This is the highest drawdown I've seen with this particular system. Down about the same as the market, actually. So what, 5.5%? Let's take a look at the numbers. I'll run the numbers here. 14,893 minus 14,113, 780 divided by 14,893, 5.24%. So this one drew down 5.24%. Obviously my highest drawdown that I've ever had with this account. Like I said, it's about even with the S&P 500 as far as where the S&P 500, how much that has drawn down. As I've stated before, the edge to selling option premium is because implied volatility is higher than actual volatility about 83% of the time. 3 of my systems are designed to make money in any market environment while mitigating drawdowns. In the last 21 months, while trading the 5-step system, my highest drawdown was 5.24%. That was this month. And this system's a great way to learn how to trade options properly without creating a lot of risk. And again, you can learn exactly how I trade this account by purchasing the course, and I put a link in the description below for the 5-step. Now I'm going to go over my main account, my larger account where I trade my synthetic dragon system. I got the name from Chris Cole's Dragon portfolio. The Dragon portfolio was put together in order to produce positive returns in any and all market environments. The synthetic dragon uses options in a synthetic manner and has been back tested and forward tested and has at least 10 times more occurrences versus Chris Cole's Dragon portfolio. This system has created excellent results in live trading in all 4 market environments. If you're interested in the backtest results for the synthetic dragon, I put a link in the description for the results starting in 2008. Now, this account has portfolio margin, allowing me to trade with more leverage in order to take advantage of a certain trade structure. So first, let me get into my take on the month of January 2022. This past month was a grind down market. The grind down market is very rare and has only occurred in January 2016, Q4 of 2018, and now January of 2020. And this is only 3 times since 2013. So that's only 3 times in the last 9 years or so. A lot of option premium sellers are down huge over this month because they sold premium on the high-flying growth stocks. And those traders that have done well since the 2020 COVID crash are now learning that the market does not just go up all the time and that they need a better plan in place to deal with down markets. The key is having a trade structure and trade plan in place that takes advantage of the premium seller's edge and is proactively hedged at the same time. If the same portfolio could be managed in less than 15 minutes a week, well, then I believe it's a pretty good system. I understand that people trade to make money, but what good is the money without the time to go with it? And this is why I'm baffled when I see people spending their time learning how to day trade, which puts them in front of the computer, stressed out all day, not to mention day trading is unproven. Would it be more prudent to learn a system that creates both time and money? This month, with my synthetic dragon, I made 3 adjustments. It took around 45 minutes to manage the whole portfolio. The system is proven and it creates both time and money. This is why I highly recommend learning about options and adding another dimension that can create a real edge. Now, here are the results from my synthetic dragon portfolio. Okay, how did the synthetic dragon do in January 2022? We started with 182,800. We ended with 188,976, and you can see the volatility. Here's December 1st. We had the volatility come down to 179.13. That's the lowest volatility there. Everything else is pretty stable. Just kind of a slow rise in the equity curve, and you can see how it just made its way up. Well, let's take a look at the volatility level. What was that? Started with 182,800, and we got down to 170,913. So the drawdown was 11,888 when we started with 182,800. So we had about a 6.5% drawdown. Now you can compare that to the actual S&P 500, which was down over 11% in the same time frame. So this is about half the volatility that we saw with the S&P 500. Now what about the returns? We ended with 188,976 at the end of the month, and we started with 182,800 for a return of $6,176. What kind of percent is that? Divide that by 182,800. So we did a 3.38% return when the market was down about 5.25%. So as far as volatility, we had about half the volatility, but as far as returns, we did about 8% better. You know, we actually had a positive return. And that's what happens with the synthetic dragon. Most of the time, it will outperform the S&P 500. And when you look at the overall returns and the overall volatility, it vastly will outperform according to the back tests and forward tests. That's what's been happening. And I expect to see that in the future also with this synthetic dragon. It will outperform the S&P. I always like to show double proof of P&L. So here is the P&L. Here's the time and date for the SafeWheel account. Here's the P&L for the Earnings Edge account. Here's the P&L NetLick for the 5-step. Here's the P&L for NetLick here for the synthetic dragon. If you want insight on how I trade the synthetic dragon portfolio, you can purchase my book, A Portfolio for All Markets, or you can check out the course that I took that brought my options trading to another level from Ron Bertino called Trading Dominion, and it's the PMTT course. If you decide to take the course and use my affiliate link, when you complete the course, you'll be given the opportunity to join the mastermind group. If you join, just direct message me within the group, and I will send you an archive trade plan almost identical to the synthetic dragon. I've left a link in the description for my book, for my review of Ron Bertino's course, and an affiliate link for Ron Bertino's course. Now, if you have a smaller account, you can follow my SafeWheel for free or my earnings alert system. And if you're more interested in learning how I trade options and eventually want to graduate to the synthetic dragon, then I recommend my 5-step course. Now see the link in the description for the Earnings Edge and the 5-step course.